Hello friends, again today we're going to look at a very interesting stock which I covered in the newsletter that was sent out in the week of 19th July. So that was a ninth edition and we covered 4 stocks. So today we're going to look at one stock, the very first stock that I mentioned, which is Gillette India. Now I'm going to analyze and look at this stock from both a fundamental analysis perspective plus a technical analysis perspective. Now in fundamentals, we'd look at how the company is doing, how the company's profits have been, the sales have been, whether the company is growing or not, and how have been the recent results in the recent quarters. That's what we'd be looking at in the fundamental analysis. I'd not be getting into too much in depth, but we'll just look at a very high level picture. And then we'd move on to the technical analysis where we analyze what the price is actually doing. And that's very important to look at what the price is doing, because you want to find the ideal entry point for a stock. Not every stock can be bought at any level. Every stock will have to be bought at an ideal level where your risk is probably the least and you want to gain on the higher side, and you don't want the stock to go down 20-30% from the point you buy. Right. So let's look at the stock today, Gillette India. Now, if you haven't subscribed to the newsletter, do subscribe. You do have a very short fundamental plus a technical view in the stock with proper entries, stop loss and all of that. So jumping into the first part, which is the fundamental analysis. So Gillette is actually a very well-known brand in India, right? So we all know that it is in the home care grooming segment, and also it's in the oral care segment. It has razors, blades, shaving gel and whatnot for grooming, and it does have a very good reach in India, and a lot of people have you might have been using Gillette products, but so we all know that it's a very good brand. We do love their products, and it is a very good company. So that is also what we look at from a sales perspective, or from a revenue perspective, or from the financial perspective. So the company is decent company, around 20,000 crore market cap. It does have a very high PE, but that's primarily because the company has a very good ROCE. Now there is a myth in the market that you should not buy companies which have a high PE. Now that's not really right, because you need to look at how the company is also growing, or how the company is performing, or how the company is actually being able to make use of the money that they are deploying in their business. Now if the company is providing a very high return on the capital employed, then you also expect the PE to be a little above that number. So here in the case of this, the ROC is around 37%, the ROE is 27%, and the stock is trading at a 60 PE. And I don't see that as a problem, and I don't see that as a very high number, because most of the companies in the FMCG space tend to list or tend to trade at a very high PE. Right? If you see here, Hindustan Unilever is trading at a 70, Palmolive, Colgate Palmolive, P&G, and this is always the case because they are companies which keep growing. They have a very significant market share in the brand, in the products they operate. So that's why they tend to be always trading at very high PE multiples. But otherwise, the company does not have any debt. It has a very good ROE. It does have a good sales growth, decent sales growth, not a very good, but a decent sales growth. But the profit growth is something that today we'll be looking at. The profit growth is right now at a 41.9%, and that's what made me look at Gillette today. And along with the price chart, when I combine both of them, it does look like a very good bet in the coming months, right? So as I said, the company is debt free, and you might want to look at the other competitors. It's completely up to you, but they all operate in the personal care segment, and everyone is specialized in a particular product in a particular segment, right? So just looking at the sales, if you see, the company has been doing around 400 crore sales, around 450 crores in the last couple of years. But look at the recent jump in the last 3 quarters, right? So we've seen a jump from 400, 450 or to 500 levels, and that's been steadily on the rise. And the other point note is that the operating margin was around the 20% mark, and in the last 3 quarters it has jumped to 26% margins. Now that shows that the company is trying to change the way it's operating, and the operational efficiency is reflecting in the operating margins, and due to which the profits have been really, they've gone up around from 80 crores, they've gone up to 140 crores. Now that's a very good jump. It's more than 50% jump in profits. Now, as I mentioned, there's no debt, so there's no much interest, but the profit is something that we need to take notice of at this point while we're looking at the quarterly numbers. Now, looking at the annual numbers, every year the companies publish reports. Now, if you see here, there's been a slight increase in the sales in 2021. That's what is expected. That's what is the numbers that you see, 1900 crores. And that percentage increase in OPM is reflecting here, and you see that massive 33%, more than 30% jump in profits, right? So that's what made me look at Gillette, and probably the downside that it is have been having in its stock is probably complete. We'll look at that shortly. But otherwise, in terms of borrowings, as I said, there's nothing. In terms of the cash flow, they have a decent cash flow and it's kind of stable every year. ROC is around that 38, 48. It was pretty high and it's now dropped to 38%. And then if you see, promoters hold a majority of the stake, 78%. So that has just not gone down. But the DIs have increased the stake in the last 1 quarter. They've gone from 4.5% to 10.6%, and even the FIs have gone from 2%. So they've increased the stake very minor by 0.07%. So that's from the fundamental analysis point of view, guys. So let's jump into the price chart and see what the price is doing. Right now, this is the chart. I'm on TradingView. If you don't know how to use TradingView, then there is a blog. In my blog, you can find out how to use TradingView. It's a very simple tool to use, not very complicated, but you need to practice, right? So just looking at this chart, now if you see, this chart is beautifully trending. So it was listed in 2006 and it's just been trending in a beautiful parallel channel. Now, I always say for a parallel channel, you need to have 2 points on both sides. So we do have, 3 touch points on this side and we have 2 touch points on this side. And you see that line over there. And that if you just extend that line, you see that it's right around that trend line over here. And that's why I feel this stock is trending in a parallel channel. And this kind of validates that. The reversal in the recent months has validated that. Now, along with this, the volumes have been pretty solid, right? So since the bottom, if you see, the volumes have picked up significantly compared to the last, since 2017, we've had the highest volumes, which shows that the companies, the big institutions or the big money has been accumulating Gillette in their portfolio, right? And in the last 3 months, the last 3 weeks, last 3 months also, we have a decent increase in volume, and that volume is significantly, above average compared to the last many years. And this week we are seeing an uptick here. So we do see a increase in the trading activity. You see this is a weekly chart, and you see that there is increase in trading activity. Now, if I just look at this level, right? So we want the stock to move above this level, which I expect that it might. So that's the range that the stock has been trading in, and moment we break this, we are going to head higher. And also, if you see here, we are trading right around that resistance zone over here. So the reason why the stock is getting sold over here is because of this support now, which is turning into resistance. So once we break this, we should easily head to 8,000 levels very quickly. And the reason why this came in my scanner is also the CCI, right? So CCI indicator is entering the momentum zone. So it did enter here, and since then it never went in the bearish zone or below -100, and we're back above 100 levels. So that's the reason I have picked Gillette, and the stop loss for this trade would be around, I think I've mentioned 5400, which is the low of this week here, this range 5400, and you can enter at the current market price, so for targets of 8,000 in the short run. So I hope you like this video. If you did like, and if you feel that Gillette is going to go ahead, let me know in the comment section. And if you're planning to invest in this stock, let me know in the comment section. And don't forget to share this video with your friends and let them know my views on Gillette and why do you think Gillette can be a good pick in your portfolio. Thank you.